I would never have expected the stock market to do what it's done to the extent it's done. And I didn't expect the market to be up on the year. I wouldn't have expected the global stimulus package. I think there's been over 500 of them. I didn't expect interest rates to be at 68 basis points on the 10-year, and they're down over 100 basis points from before COVID. So, we have massive stimulative forces, and I think they've overwhelmed what I think are the big underlying negatives of today's world and the post-COVID world. And it'll be a struggle next year as we have this tug of war between the trillions of dollars that are now in the economy and in some people's 19% savings rates for Americans today. So they're sitting on a lot of cash. On the other hand, you're going to come out of this with deglobalization forces, which are negative for the global economy. You haven't really settled on what your future of China and U.S. relations will look like. And for most of the S&P 500, China's consumer market is their growth engine going forward. You also haven't changed the fact that the Western economies are slowing in growth and population growth, and also that we've piled on 125% debt to GDP across the world. So, I still think the flood of money is going to win. And I think consumers will continue to spend, but it's positive and negatives, and then of course we get to the election,
and then you get to New York, which because it's not, your viewpoint's not monolithic, and you are seriously concerned about the long-term prospects for New York City, are you not? In terms of real estate, anyway, it's a double whammy, a lot of unrest, a lot of COVID, everything else. When does it recover? How significant is the haircut that most property values have already received here?
So I think, like I said, I think the COVID will pass and the big cities would be okay. But there's two new players you have to add to your thoughts on big cities. One is, of course, now I'd call it a safety. My friends I had a friend who yesterday called me looking for a house in Greenwich. He's never ever left New York City. So, that is not, he's not alone. There's hundreds of thousands of people looking for suburban homes. And I would say it's not as driven by the COVID situation as it is safety and law and order. And that is now pervasive across the big cities of the United States, sadly, especially in the northern states like Chicago, Minneapolis, Seattle, Portland. I thought there were hippies in Portland. I didn't realize they had huge racial riots. And so I think for we have an office building in Portland. It never occurred to me that we would have a lawless zone right near our office building. So I think that is really as important. And then the biggest new thing will be taxes. Because if you tax the wealthy even more in New York City, and I think it's 1% of the city is like 43% of all the taxes paid in New York City, and they leave, then the social net has to be absorbed by the remaining residents, and you can force them to leave. The Biden tax plan, which I'm happy to pay more taxes, but I don't think this increase in the capital gains rate is a good idea for investment in our country, which we need to do. That tax rate will go up like 15%, and if they don't reverse the SALT, you're talking 60% plus taxes on the wealthy in New York City, and they will leave. And they're leaving now. I'm become a real estate broker for Miami. I keep sending friends down and showing them houses they can buy, and they're buying. So, I think it's a shame. I think the de Blasio administration has been a disaster. Frankly, I can say that publicly. I'm not, and I don't think they understand that they appear to be hell bent on bankrupting New York. And whether it's gyms, which are not allowed to open, I guess they'll open on the 2nd, but and small restaurants that can't serve indoors here but can serve indoors anywhere else. I mean, I really think it's crazy. And this tug of war between the mayor and the governor is in nobody's interest. It's like a macho race to oblivion. The city has to get its act together, and the city will recover. But on the margin, what we care about is real estate values, really, for our investors. And yesterday we had an update of sort of leasing velocity in the United States in offices. And you haven't seen negative absorption in office since 2009, but it's here right now. But again, I'm an optimist. I actually think companies will come back to work much more aggressively than you think, as soon as it's safe for their employees to come back to the office. So right. I think companies, CEOs would like them. I was recently with the CEO of a tech company. I won't tell you which one. And they made an announcement that people don't have to come to the office till the middle of 2021. And he said to me, that's not really what we meant. We meant was if you have hardships or you're at risk or you have an issue with your children and they can't go to school, you can stay home. But we really like you to come to the office. And I'm going to hopefully see if he will say that publicly so we can change the dialogue, because I do think companies most companies are much better off with their employees learning from each other, sitting next to each other, chatting with each other, and it's a social environment, not just. I particularly don't like working from home, so I like a change in venue in my life.